And welcome. This is Mary Ellen McGonigal with your Friday afternoon MEM Edge show. And as always, this is the show that brings you where the action is in the broader markets. Another very interesting period, a little bit bumpy. We'll get into what drove price action last week. And then also all of this is with an eye toward helping prepare you for the markets going forward. So we'll take a look also at some key data that is due next week as well, and take a look at where the broader markets closed. Are we in a new uptrend or not? And also some areas, sector rotation beginning to firm up. It has been shaping up, so we will go ahead and take a look at that as well. And also at ways that you can really refine your watch list and potentially begin to dip that toe back into the market. So let's go ahead and get started with some of the news last week. First up, we did see the energy sector was the worst performing last week, down over 4.5%. And a lot of that had to do with news that inventory for gas really built up. We're seeing lower consumption of gas due to the high pricing. And in turn, we did see a number of energy stocks suffer quite a bit last week. We also saw weakness in those utilities, staple, and REITs, those names that generally are viewed as defensive and do offer a nice high yield in the face of continued elevated interest rates. And I'll share with you where we are on that yield into the close today. But certainly as an alternative, many investors are shunning those defensive and volatile stocks and heading for those government protected treasuries. Also last week, we did see U.S. jobs growth numbers on Wednesday. The private sector, we saw growth that came in much lower than anticipated. Generally good news. However, it was not overly celebrated. Instead, it was today's employment data for the month of September that really got investors a little more interested. And first up, we did see that the number actually relative to employment was quite high, but was good. The golden lining, if you may, was the fact that wage growth is pulling back. And this is the key component the Federal Reserve is keeping an eye on, because that wage number is really the item that is keeping inflation elevated because wage pressures are elevated. So that was news that was embraced today that pushed the markets higher. We'll get into all of that as we move through. Next week, we will have impactful inflation data by way of CPI and PPI data due out next week. So you will want to be on alert for that. But from here, let's go ahead and take a look at those markets and see where did we close for the week. And here we are with the daily price chart of the S&P 500, and a couple of key areas that I've marked up here. First up is this key 4,300 level that we've been talking about for weeks now. For quite some time, going back earlier this year, it was viewed as a key area of upside resistance. And since we broke down below it earlier last month, it again became a key area of potential upside resistance. Good news here, we did close the week above that 4,300 level. Some other key metrics to keep an eye on here is the momentum. We do see the RSI heading north. We, of course, would like to get that up above that 50 to confirm upside momentum. Let's take a look at the faster moving stochastics down here, another momentum indicator coming out of this oversold position and ideally heading north. It certainly does have that bias at this point in time. And other impactful areas here are this 200-day simple moving average. Subscribers to my MEM Edge report will know that repeatedly I cited the fact that a break below that 200-day would be quite negative. So for now, we are edging up back above that 4,300. So net, good news here on the broader markets. Certainly today's rally was quite a big help. We will need to see further progression before turning bullish. Let's take a look at the Nasdaq, the tech-heavy Nasdaq. Again, in my MEM Edge twice weekly report, I've been highlighting the fact that the Nasdaq has really firmed up quite a bit better than the S&P 500. And then today's rally has pushed that index up for a nice 1.5% gain relative to the S&P, which was up a little more than 0.5%. So we are seeing nice firming up. This is what we want to see. The Nasdaq was this leadership group coming out of this downtrend reversal, and we want this leadership to ideally be resumed. And we were able to break back up above this key area of support or resistance. And good news there. Stochastics, you can see they're certainly a bit further along in their upside advance. Likewise with this RSI, we are just now poised to turn positive. And I'm not sure if you can hear the excitement in my voice, but it would be certainly good news to see this index advance further. I'm going to take a look after this at the volume and other characteristics, and we'll get into much more detail on my Sunday report. But from here, let's go ahead and take a look at the underlying sectors in the S&P 500. We have the 11 sectors, and this is a 2-month daily price chart view of those sectors. I've sorted it by relative strength in descending order. What we're on the lookout for here are groups that are newer to this forefront. And in fact, we are seeing that this week. I'll just take you down here to the energy group, which had been up in this forefront area for quite some time. But let's just take a quick look at this chart. You can see the swift deterioration that took place. In my last Sunday report, I did remove almost all of the energy names simply because the energy sector did not have confirming momentum metrics. When you reach a near-term high, the pullback, and then a potential resumption of that prior high, you want to get that confirmation with the momentum to shift higher as well. And certainly didn't foresee this much of a sell-off, but the weakness was evident. Now, as we move through and take a look at some of these other areas, I talked about these REITs, utilities, and staples, and they remain in this lower quartile, very, very weak areas of the market, down another 3+%, certainly for staples and utilities, continuing to get pummeled. Now, let's go ahead and move up here to the forefront, and I'll share with you this chart of the communication services. And it really would be well to rename it the Internet related industry group, because that's what's really carrying this index or this sector up here into a new uptrend. The communication services sector overall, over the last 1 and 3 month, and certainly this past week, has been a big outperformer, certainly mostly by not going down as much as the broader markets. But let's take a look at this close with XLC. We can see we've now moved up above each of these moving averages, and your RSI now in positive territory. MACD poised for that black line up through the red, and that would be a confirmation of a new uptrend. There is certainly one name that is really leading the communication services higher, and it is the one name that we did keep on our suggested holdings list throughout this pullback. So moving along, taking a look at technology, and we can see that we did undercut this prior low. So at that time, it was certainly put up some red flags, but let's take a look at where we stand after today's almost 2% rally. We can see that RSI now in positive territory, black line up through the red on that MACD. So we are continuing to firm up. This is something I have been talking about because we have been inching higher. Tech has been an outperformer, certainly over the last 2 weeks. So another area here, this is newer as it relates to progressing from this weaker area up here to the forefront. This is XLB, the healthcare sector. And take a look. You can see it is still very much in a confirmed downtrend, but I will be sharing with you certainly one name, a couple of names actually, that are looking quite constructive in this area. We've seen a lot of damage, certainly among medical products and other healthcare areas, But this vibrancy is what we, of course, want to see, because healthcare is not only defensive. There are growth areas within the industry. They are coming out with new drugs, new medical products. So that's the area that I key in on, and it is what is driving this potential downtrend reversal. And relative to some of these other areas, consumer discretionary was flat for the week. You can see this back and fill formation taking shape. I will say we'll take a look at the retail group after this, because it is still continuing to suffer, but you do want to see that nice progression here on that RSI. We're not quite out of the woods by any means, but it is certainly keeping an eye on, worth keeping an eye on with this back and fill formation. Ideally, of course, at some point, we will want to see these growthier consumer names come into play. Now, from here, I'm going to take us over to the ETFs that I find to be really quite powerful. And again, drilling down, you want to see not only is the broader market showing strength, what about beneath the surface? What's driving these markets? So let's go ahead and take a look again, strength to weakness. As always, it's with an eye toward you wanting to be participating in those areas that are exhibiting outsized or certainly outperformance relative to those weaker areas. So first up here, which has been the case for some time, is the view on that 10-year Treasury yield. And you can see that we did spike today. Originally, that employment data was viewed quite negatively, and we did spike up to about a 4.9 before pulling back. So we can also see this MACD looking as if we could see this elevated interest rate scenario for some time. And for those of you that want to stay on top, because in addition to looking at the actual yields, you really need to pay attention to sentiment. We've had periods where the yields were rising back here. Certainly July would be a prime example. Yet these high growth tech names were still rallying simply because sentiment was that we would not see another rate increase. And I will be covering that in my weekend report as well, that where that sentiment lies now. Let's take a look at some of these other areas as it relates to that move into technology. And here is software, IGV, the expanded tech software sector. And you can see it had a nice, healthy 3% rally. We can see that RSI now in positive territory with the group now above these moving averages. And this is super compelling to me, quite simply because we had the earmarkings back here in late August of a new leadership group coming into play. And it was for a very sound reason. These software companies were coming out with strong numbers, particularly software security and other areas. And then the demise here due to broader market pressure. So ideally, want to see that get back into some nice leadership characteristics, and then moving through as we take a look at another tech area that is relatively up in the forefront with this ranking. And we can see a little more work. This is semiconductors, SOXX, but take a look, RSI now in positive territory. And we did get that head fake back here in the end of August, but there are entirely different dynamics at play. So you want to keep an eye on that with these semiconductors progressing. It's not an all in, it is a have and have not. The good news is there are only 90 semiconductor stocks that are publicly traded. So from my work, it's quite easy to disseminate and get in front of those names and find out why that particular area is outperforming. That's where you'll want to be. So moving through, we want to also be aware of some of these weaker areas, and small cap stocks are continuing to suffer, down 1.8% despite today's 1% rally. So we are seeing continued weakness in these smaller names. Not terribly surprising, but ideally we would like to see that particular area firm up and come back in to favor. Other areas, in fact, not sure if I mentioned the US dollar, but it is still elevated and we are seeing a continued sell-off here. This is DBC, the commodity index, and gold certainly would be a heavyweight here, but other commodities being negatively impacted by that rise in the dollar. We're a little bit oversold here. So for those of you that are bottom fishers, you will want to go back, use historical precedents to uncover those characteristics that really signaled a new near-term uptrend, positive momentum shift, and so on. So from here, a couple of other items that I did want to share with you. There was a somewhat interesting move in the markets today where the head of Walmart came out and talked about reduced spending on food because of Ozempic, the weight loss drug. So interestingly, I'll share with you a couple of names there that did in fact pull back, and not all the areas that pulled back. This is that kind of news where the pullback is not as relevant as it would be seemingly on the surface. But let's take a look. This is Domino's Pizza. We can see it already had been in a downtrend, down another 6% this today on that news. Another name that was on my watch list because it was exhibiting signs of a potential downtrend reversal, and that is Wingstop. And we can see that it pulled back almost 5%. Now, interestingly, buyers did come in on this dip. So you'll want to keep an eye on that because quite frankly, the comments from the CEO of Walmart were not alarming. It was just almost a throwaway comment that they are seeing a bit of reduced spending on the food side, but not anything overbearing. So let's take a look at, in fact, Walmart. You'll see that it did, in fact, pull back. It already had broken down below this 50-day simple moving average. But when you see a stock, in this case, pulling down to this 152 level, and then buyers coming in, take a look at the volume. Now, we're not in a positive position quite yet, but from here, what you can do is go ahead and drill down to an intra-day chart. Here's that original sell-up on the news into an oversold position, and then buyers coming in, pick up here on the volume. So you could see that continue if that news is deemed not quite as relevant as was initially expected. Next up here is Costco, and this is one of the names that I certainly would suggest was not due a pullback, primarily because Costco does have a wide array of products that they offer. But most importantly, if you look at their numbers on a quarterly basis, in fact, they do report even more frequently. And much of their revenue comes from their membership fees. It's not so driven by product sales. So you can see this pullback below key support, buyers coming in on the dip. So other areas that I do want to share with you, we talked about IGV software stocks coming into play, and we can review a couple of the certainly more attractive names going into this week's rally, and that would be names such as Crowdstrike, and it was up a good 6% today. But what I did want to highlight with this is the fact that on that, certainly the rally today, we did experience a base breakout, and we also did see that take shape on very high volume, and that is good news. Buyers coming in, and we also are seeing this MACD poised to have that black line up through the red, and we do have a positive RSI. So this is a name that was at the top of my watch list for when the group turned positive. And then also we can take a look at another name that's in the same space as Crowdstrike. It's software security. Many of you may be aware of the cyber security issues out there. Clorox was one of the more recent companies that got hit where cyber attack came into their system, and they're still commenting weeks later that the damage is pretty widespread. So here we are with Palo Alto, PANW. on the cusp of a potential base breakout with this black line up through the red MACD now entering into positive territory. So lots of attractive names in this space that have been bubbling up because they were holding in better than the markets. And now we're beginning to see some breakouts. From here, I'll share with you a couple of downtrend reversal possibilities. Not my cup of tea. Ideally, I want to capture those stocks that are up and potentially hitting new highs, breaking out of bases. They're going to be more interesting to me. But we can take a look here at Paycom Software, PAYC. And this big gap down here was all about the release of earnings, heavy volume, lots of distribution. But if you are of that investment philosophy where you want to capture stocks that are coming out of these deep pullbacks, we can take a look at PAYC because it has broken back above that 21-day simple moving average. We have the beginnings of that MACD crossover, and the RSI is poised to turn positive. When you have a stock potentially coming out and reversing, if it is emerging from a oversold position on that RSI, historically, you will get a little more of a push. So I certainly did want to share that name with you as well. So from here, we can also take a look at other names that are up here and one last name in this software space, and then we can move forward and I'll share with you other areas of interest. This is MANH, Manhattan Associates, and we can see the stock has been in a bit of a very tight trading range here over the last month. Today's move did advance the stock above the highs. That's a flat base breakout. And again, the shift of momentum into positive territory. So let's go ahead and move on from here, because what I want to do is I would be remiss to not share with you some very exciting news. And that is that Nvidia has turned bullish. We're now above each of these moving averages. We have that RSI in positive territory. This is one I've been writing about in my MEM Edge report, quite simply because it has been having this stealth move higher. This is a name that these big institutions need and want to have representation. It's the bellwether of AI, and certainly among semiconductors, the leading name. So this stealth move here has advanced into a bullish phase. So good news there. Now, I also wanted to share with you other areas. And with the interest rate still being elevated, there is talk that the interest rate hike cycle may be behind us. So certainly there will be investors on the lookout for, at some point in time, a resumption of interest in these home builders. This is XHB, the Homebuilders ETF. And you can see, if I were to overlay the yield on top of this, as interest rates have been skyrocketing, of course, mortgages have gone up, and the interest in these names has deteriorated. So what I'm on the lookout for is, at some point in time, because certainly underneath the strength that drew these groups up to these heights here in August still remain. And there is anticipation that we will see renewed interest in these, certainly new homes. It's all about supply demand. There's not much by way of supply, and there still is pent-up demand, so that if we do see interest rates recede, you could see certainly a nice rally. One area among these home builders that provide goods to help assist in the building are really on the move higher. This is Modine Manufacturing, MOD. I'm going to go ahead and pull up a full quote and see if we can get that. Actually, this is an discretionary auto parts, and I'm glad I did that, because but we will segue into those home building suppliers. But this is another area that has been on the move over the last week. We can see this nice base breakout, downtrend reversal here. From here, let's take a look at another name that is in this very same group, but it's more commercial vehicles. This is PACCAR, PCAR, potentially forming the right side of a base, that momentum shift into positive territory. And from here, I will go ahead and pivot over to that building materials industry group. And here we are with Watsco, WSO. And we can see it's a $15 billion large company, and it did experience a base breakout back here about 2 weeks ago, a nice continuation rally, very counter to what we were seeing in the broader markets prior to the end of this week. So the fact that we are seeing vibrancy in some of these companies that provide materials to those builders is certainly interesting. We're a little early. This is Fix Comfort Systems. They do heating and other products. And we can see at the very least, the stock has stopped declining. We are potentially wedging here. It's going to take certainly a little more work as it relates to that possible turnaround. And then one last name that is a provider of building materials is Eagle, EXP. Now we are early, but it is certainly of interest to me that they, at the very least, the losses are stemming and we are seeing a potential reversal. We could see this get into positive territory here. And of note with EXP is the fact it had leadership qualities, and they do provide cement and other building related materials. So keeping an eye on that. This is the type of work that I do behind the scenes as far as getting my arms around what is bubbling up. Is it telling us that we could see these builders come back into play? Now, from here, I did want to, we talked about XLV having at least a rally this week. We are by no means out of the woods, but let's take a look at a couple of names beneath the surface. And first up, I would be remiss not to share with you Eli Lilly. And this is their gap up on earnings, but also very positive news. Another Ozempic related trade pulled back. And this is all about a pullback in the broader markets. You can see that we got into an overbought position with that RSI up there above 70, and a pullback certainly would make sense. And we did, in fact, experience that. And this week, it's still a little bit earlier, but we could be turning around. Just one last name here that we can take a look at. Vertex Pharmaceutical, VRTX. You may be familiar with the company. They do provide medicine and products that actually go in and rearrange the DNA. I know I'm not getting this scientifically proper, but it is revolutionary as far as their drug delivery and the effectiveness. And the stock is coming out of this nice potential base breakout here. Keeping an eye on this name, I view it as a bellwether among biotechs. And we can just take a quick look at that biotech group because it has really been under selling pressure. But again, over the last 3 days, we are seeing some buying activity within that group. And that's it for this week. Everyone, I hope you have a fantastic weekend. If you like what you've seen, go ahead and hit that like button below. And also, I do have a link there to trial my twice weekly MEM Edge report. And last up, if there are any areas that you want to see covered in the coming weeks, please drop a line about that as well. Have a great weekend, everyone. See you next Friday.